You are losing exactly 22% of your remote salary to a banking shadow tax you don't even see on your Wise or Revolut statements. In June 2026, relying on traditional Swift rails to move money is like using a horse and carriage for a cross-border commute. By the end of this video, you'll know how to reclaim thousands every year using a crypto-native salary stack. And if you have a US passport, the number is closer to 26% once the FBAR compliance cost is added. Most nomads earning over $50,000 think they are being efficient by using Wise or Revolut. But heading into 2027, the hidden math of international fiat tells a different story. Start with a 3% currency spread on the sending side. Add a 2% FX markup that the receiving bank quietly applies when your dollars land in a local account. A fee that never appears on any statement. Layer on the notorious 10% intermediary bank, cut common in emerging market corridors, the 4% opportunity cost of a 5-day settlement delay, and the final 3% hit from local ATM or over-the-counter exchange rates in hubs like Bali or Medellin. 3 plus 2 plus 10 plus 4 plus 3. That is exactly 22%. Unlike 2025, where we accepted these as costs of doing business, 2026 technology has made every one of these fees entirely optional. Moving to a crypto salary doesn't just save money. It eliminates the middleman friction that traditional banks use to subsidize their legacy infrastructure. The conversation around safe payments has shifted. On June 11, 2026, CNBC reported that the safest ways to pay are no longer just traditional credit cards, but encrypted direct settlement protocols. CNBC 2026-06-11. Traditional wires are safe from a legal standpoint, but they are risky for your cash flow. A single compliance flag can freeze your entire salary for weeks, while a legacy bank in a high-tax jurisdiction demands proof of address you don't have. Crypto payments, specifically stablecoins, allow for instant, immutable settlement. You aren't trusting a bank's internal ledger. You are trusting a public blockchain. Heading into 2027, the risk is no longer the technology. It is the inefficiency of the old guard. If you are still waiting for a Swift wire to clear so you can pay your rent in Lisbon, you are operating on a 1970s timeline. The number one excuse for avoiding crypto salaries used to be high transaction costs. But as VentureBurn reported on June 14, 2026, gas fees are no longer a barrier if you know how to save. VentureBurn 2026-60 and 14. By using Layer 2 networks like Base, Polygon, or Arbitrum, or high-throughput chains like Solana, your transaction cost is measured in pennies, not dollars. A salary payment of $10,000 can now be moved across the globe for less than 10 cents in gas. Compare that to the $30 minimum most U.S. banks charge for an international wire. In 2026, the sophisticated nomad isn't using Ethereum mainnet for their daily bread. They are using optimized rails that provide the security of a major chain with the cost profile of an email. Let's get one thing straight. Receiving a salary in crypto is not a tax dodge. In 2026, the IRS and local authorities in territorial tax countries like Panama, Georgia, and Paraguay view crypto as property or currency for income purposes, a position codified in IRS Notice 2014-21 and reaffirmed in each subsequent guidance cycle. For Americans, the foreign earned income exclusion still applies. Per IRS publication 54, 2026 edition, you can exclude approximately $130,000 of earned income, whether it is paid in USD or USDC. However, you must track your basis the moment you receive each payment. Furthermore, if your crypto is held on a foreign exchange, you trigger the FBAR requirement the moment the balance exceeds $10,000. As specified in the FinCEN Form 114 instructions, sophisticated nomads use self-custody wallets to maintain true borderless freedom, while remaining strictly compliant with the 183-day rule to avoid becoming an accidental tax resident in a high-tax jurisdiction. The old way to build credit was through 0% APR credit cards, which Yahoo Finance recently highlighted as a key tool for June 2026. Yahoo Finance 2026-05-29. But nomads paid in crypto are using a more powerful strategy: collateralized spending. Instead of waiting for a U.S. bank to approve a line of credit based on a domestic address you don't live at, you use your stablecoin salary to back a crypto debit card or a credit line. This allows you to earn rewards while spending in local fiat, like the baht or the peso, at the mid-market exchange rate. By 2027, the traditional credit score will be less relevant for nomads than their on-chain history. You are effectively becoming your own bank, which is the ultimate goal of the FIRE movement. This setup lets you keep your core wealth in accumulating assets while using crypto salary rails to fund your geo-arbitrage lifestyle. But collateralized spending only works if your legal structure can defend the assets behind it. And that is where most nomads leave the door wide open. Here is the legal layer that most nomad finance channels skip entirely. A Wyoming LLC provides charging order protection under Wyoming LLC Act, Section 1729-1029, which means a creditor who wins a judgment against you personally cannot seize the assets held inside the LLC. They can only wait for distributions you choose to make. For a nomad operating with a crypto-native salary stack, that single structural move separates your income-generating on-chain address from your personal liability exposure. Formation costs run under $500. Annual filing fees are under $60. And Wyoming levies zero state income tax. Your clients in New York or London invoice a U.S. entity. You receive payment in crypto at the LLC level. And the charging order protection under Section 1729-109 ensures that a dispute with one client cannot cascade into a personal financial crisis. This is the missing link between your crypto salary rails and permanent defendable wealth. If this breakdown is saving you money, hit like. It helps more nomads find this channel. You now have the framework to stop the 22% bleed and reclaim your remote salary using crypto rails. But a crypto salary is only one half of the puzzle. You need a legal entity that the legacy system respects. In my next video, I'm revealing the 3 offshore LLC structures that cost under $500 to set up and are fully compatible with on-chain payments. Subscribe so you don't miss that one. It is the key to making your borderless wealth permanent.